in this particular case, if you had shorted this double top, can you see how it would have been in your best interest? Don't get in this thing's way. Just let it do its thing. I and again, I didn't take this trade, but hats off to Dave. I mean, basically, he pointed this out first thing this morning, and I was like, damn, of course, hindsight 2020. Damn, you guys are right. I mean, I mean that's an absolute textbook definition of everything we're trying to teach you here. I think the odds are that this is, yeah, that's what I was thinking. 1.6. There's a midpoint of the extension zone. That's where we are right now. So what a great sort of confluence. Just give yourself permission to let this thing puke out. And it's not so much that you're expecting this thing to happen. And this is why I really like this sort of 3 high-low method that I teach you guys is, let's say, just really simply put, I didn't do this trade, so I'm not going to sit here and go, oh yeah, look at me, I'm so smart. But let's just say you shorted this M top up here, which is pretty normal. First stop, the way I would suggest you do this is things like you want to shoot for like a 2-to-1 risk reward. That should be definitely something that's paramount to take some profits on. We'll just go something like that. Let's be a little bit higher, but you can never make it do that. Come on, you a little bit. Anyway, something like that. I like to use things like 50% rules to frame profit levels. I know, for instance, what a coincidence. Do you guys see? Maybe this trade was actually a bit manufactured. I ideally would like to have a tick just above there. So 39.49.50. Let's go 39.50. All right, just keep it nice and simple. So 2-to-1 in that area. Interestingly enough, on this one, you can see it was confirmed here, and there was plenty of opportunity to get in, like it dumped down to here, so don't chase, just work your order. In fact, this smart trades, and actually, I think I'm going to try and make this a habit going forward, to try and take that trade, even though, yes, there is an M, but to try and take the trade off of the actual candle body fail levels. Anyway, maybe it helps the risk reward a little bit more, right? And even there, where's 2-to-1? Maybe you go off the candle bodies, that's way up there, right? 2.618. Again, awfully coincidental. Can you, what does Brian like to call it when you have like multiple levels all sort of saying, hey, there's something going on here. If anything, all of us should look at this and go, this is a completely planned trade. With a trade like this, if you let it go pay for like a month, it might pay for a year. You never know. And the interesting thing too here is, can you see how this sets up a, what do we like to call that setup? Can you see the trend line break, the counter trend rally up, and then look at this war here. Oh, we go down like, say, a 3-minute. So there is the trend line break. Boosh. You already have your market structure top all in place. Rally up. Give me any kind of failure, anything, any reason to get short in here, any kind of sell signal, and I got to go. So actually, that's a pretty good example of an LJ. Or RJ, depending on your temperament. So I guess just the point is what I would normally do is I would go sell 3. Now, what do you think the odds are as we were pushing up into here? There were bearish momentum divergences. Probably pretty good. Let's see. Oh, hello. Nice confirmed bear div right there. RSI. Look at that. Bear div. Willie's stupid. Look at that. Minus 14. Super stupid. So you could definitely say as of here, lots of momentum divs. We got 50% heading down. What would we call this trade setup? And this is one of my favorite setups. God, I learned this setup like 30 years ago. So hopefully you can see higher highs in price, lower highs in momentum. You want to use RSI. Look at that beautiful RSI div breakdown. Julian would love that. Willie, nice and stupidly overbought. Look at that, minus 14.93. Look at the Williams percentage R itself, -1. I talk about overbought. Holy moly. So, and the interesting thing about this is a good example where you see all the indicator signals are all coming in here. So kind of like what I showed you with the Russell 2000 there earlier. Here is where we're going to get the big break, right? And it's that pullback that fires all the bear momentum failure signals. But notice, look how long the actual top took to develop. So as of right here, right, we've got location. We've moved up quite a bit. We have indicator confirmation. Things are breaking down. You know, this is 2, 3 o'clock in the morning my time. I'm fast asleep. Then lots of chop, lots of chop, lots of chop. Holy crap. Look at the size of that M coming in. Let's hit that M. I don't really mind that. 50% rule is your initial objective. So really here we want to take profit on one. And move your stop to scratch, whether you take the profits at 2 to 1 or the 50% rule. Maybe you take one profit on one at the 2 to 1. I always like that idea. Then, you know, whether you take another one on the 50% tag, man, you know, it's discretionary. But the point here is, I think at this point here, you've won the game. But what I found in this game is that it always helps, and I like the idea that, especially on this event, move your stop with whatever you have left. Just move it to scratch. And then in this game, right, what you really want to do is try and have that runner. And this is where the 3 high-low method really kills it. So say at this level here, you're going to put your stop at scratch. So if you count backwards, you know, even say here, or even here, now that you've hit this, say 50% roll, you'd go 1, 2, 3. So your stop's still at scratch. And notice this move right here, they blew out all the really impatient kids that move their stop here. Then it goes and M's out, and we start puking out big time. So at this point here, you could go 1, 2, 3. Well, my stop's still at scratch. Market's just absolutely collapsing. And this is a really, really good analogy of just let your money work for you. Market rallies back, then comes in, puts in a new M. So now you can go 1, 2, 3. Hey, I give myself permission. I can move my stop to there. Market craps out, makes a new low. Notice we rallied back up. We came back down. Did we trip, all the noobs? Right? Quick, got to move my stop in here as fast as possible, right? So I'm going to move it to just above that high, 51.75 and 52. Boom, you're gone. But we should have been going 1, 2, 3. I can move my stop now down to there. Market flushes these guys out, then goes and M's out again. So now we got another new M, 1, 2, 3. I can now move my stop to just above there. Market makes another new low, rallies back. You can even see, is there a little bit of back and forth? Did they screw the noobs again? Do you see how 3 times in a row All right, here, here, and here. The noobs got busted out of a really good short trade. This is why I do the 3 high-low method, because if you do this, you're going to get flushed on what's actually a pretty damn good position. But you got to give the market room to breathe. So anyway, they did it again, rolled over, broke to new lows. All right, so now I can go 1, 2, 3. All right, now I can move my stop down to there. Market comes down, makes another new low. This is a rally peak. 1, 2, 3. Oh, great. I get to move my stop to just above there. So the point of the matter here is you're still in this short and you have no idea where the hell the damn market's going to finish. And now look at that trade. Son of a...